This is the Investor Mindset Podcast. So tell me a little bit, you were working as a full-time attorney, you were having success in your position. Tell me a little bit about what was that moment that you realized, I got to make a change and maybe there's another option.
Yeah, there were a couple of them, but I think the big one, man, was seeing these, and it wasn't maybe just one moment, but there are attorneys that are, 65, 75 years old, still in the office, still billing crazy hours on top of all the educational or administrative duties that they've got to do. I saw these guys at these big law firms and I'm just starting out, I'm associate. I understand I've got to do this stuff, but seeing them still doing it at that age when they're making, well over $1 million at that point, it's like, when does it stop? If I do everything right in my career and I don't make any big mistakes and I, work my way up that partnership ladder, that's where I'm going to be. And I saw that and I was like, that's not the goal. I don't want to be 75 in the office. And I've worked so many hours and put so much time and devotion into that career that I've kind of lost track of my relationships, lost track of the experiences and what's really important in life.
And what was that feeling like when you realized that the direction you were going and the seeds that you had sown for so long that were now coming to bear fruit wasn't actually fulfilling or bringing you to the place that you wanted to be?
Yeah, to be honest, it was a little disheartening. I was in school for a long time. I worked really hard to get top 10% of my class so that I could get a big law firm job out of school. And then you get there and you're making good money and you don't really have time to even think about it until you see those guys and you're like, whoa, wait a minute. And then you're like, well, what am I going to do now? How am I going to transition to something after I've already put all this time in? But, at that same point in time, it was weird. I don't know what attracted me to real estate, but I've always been attracted to it. And literally, as soon as I got that first big law firm job, I house hacked into a duplex. And that was my first piece of real estate that I bought. So I started investing in real estate basically from day one when I started working as a big time lawyer and went from there. So even though I was a little disheartened with the fact that, that partnership track wasn't what it cracked up to be, I already had another route kind of planned out and ready to go.
Yeah, I think it can be great to start understanding what are those other options that are available. And I always recommend people to sit down and realize that if there's one decision, you have no decisions. You really need to sit down and kind of brainstorm what are the potential options that are available to me. Because, kind of per the example we've been discussing, the option isn't to leave the job and try to find some new career that's outside of the industry. That's one option, but there's many different options that are available in order to kind of create the life that you want to create. And that can actually be the difficult part, is that there's a lot of different directions you can go that can all bring you to a really beautiful place. But it's really critical to kind of get clear on what it is that you want your life to look like, and then understand how can you take those skills that you're the best at, those unique abilities that you've developed, and how can you leverage those in a really powerful way? So when you had that aha moment and you had already kind of created some other options for yourself, what brought you into the space where you decided, hey, I'm going to invest passively?
Yeah. Well, I started doing fix and flips, buy and hold, single families, small multifamilies. When I say small, I mean still in the residential space, so 1 to 4 units. I quickly saw that wasn't really the scalable game. And I got tired of dealing with, low-level contractors, low-level property managers, vendors that just weren't really up to snuff and really weren't accountable for their work and their actions. And at that point, I realized that I needed to scale up and get into commercial real estate. And I was already exposed to it because I'm a real estate attorney. So I had seen these big deals getting closed. I had helped developers and purchasers buy and sell these properties. So I was already exposed to it. But at that point, I was still kind of battling that mental game. It was like, I would see these guys come in and they're regular dudes. They're not Donald Trump. They're not, some guy that is untouchable or something. They're just regular guys like you and me. And I think that's when I started thinking, well, if they can do it, then I can do it. And I started looking into that. And then you start networking, you go to the meetups, you listen to the podcasts, you read up on it, you get educated. And then I thought I was ready to make the jump. I started talking to people and they were like, well, maybe you should invest passively first. I took that advice. I invested passively in a few syndications. I knew all along though I wanted to transition to the active side. So eventually I did.
Yeah, that makes sense. And what do you recommend to people who are on that passive side and they're looking at trying to go through the process of comparing one deal to another deal?
Well, when you're comparing one deal to another deal, most people look at the returns, right? They're just looking at those numbers. That's your instinct. You see a 17% IRR and you see another deal that has a 22% IRR and you just pick the 22%, but that's the wrong way to look at it. What you really need to look at are the sponsors. Look at the track record that they've done, make sure that they've done it before. And speak to other people in the industry to see if their track record pans out. I mean, that's what it comes down to. The most important thing is the sponsorship team, the GP team, the folks that are actually going to execute the business plan rather than the property itself. Of course, the deal, the property, the market, they have to check out. You can check those boxes with your due diligence, but the most important thing is the sponsors.
Yeah. So it starts with the sponsor over the deal. Why is that?
Because again, you can fudge the numbers. I mean, you can change those numbers and make them look however you want to look. And unless you are really good at diving into the underwriting, you might not be able to recognize how those numbers have been, maybe not even on purpose. It's just the way that somebody underwrites one property compared to another group that underwrites a property. They might be a little bit different. And just that little bit of difference, let's say year to year rent growth or your exit cap rate, those things that can change those returns quite a bit by just changing the number a little bit. That's going to affect those projected returns quite a bit. So you really need to look at the sponsorship team and their track record to see if they've executed the business plan before.
Yeah. So you want to look at their track record because at the end of the day, different people are going to present information differently. A deal that has a 14% IRR versus a deal with a 20% IRR, the 14% deal might actually be a better opportunity that's going to match your profile and risk profile, as well as the returns that you're looking for based on maybe that sponsor's ability to be able to deliver the returns. That doesn't mean the 20% deal isn't a great opportunity, but this is a big mistake people make. It's a big mistake that new investors make, but it's a big mistake that all of us get caught up in, is that we focus on comparing apples to apples, but we really don't even have two identical fruit next to each other. We're really comparing apples to, some kind of melon or some kind of crazy thing that's not even related because they're totally different types of opportunities. If you're ready to start leveraging the power of partnership in your portfolio, then I invite you to invest directly alongside us in the same type of institutional investments that I personally invest in. These are located in some of the strongest markets across the country, operated by managers with decades of experience. And we come together to leverage the power of partnership to be able to deliver phenomenal returns. You can learn more and apply to work directly with us at vonfinch.com/invest. Be able to schedule a time directly with a member of our team and see if this is the right fit for you and your portfolio. That's vonfinch.com/invest. I look forward to speaking with you soon.
Thank you for listening to the Investor Mindset Podcast. If you like what you heard, make sure to rate, review, subscribe, and share it with a friend. Head over to theinvestormindset.com to join the Insider Club, where we share tools and strategies from the top investors and entrepreneurs on how to take it to the next level.